Following a blockbuster IPO, SpaceX has left bond traders stunned after its newly issued debt quickly lost value. The company's $25 billion bond offering has resulted in paper losses of roughly $305 million, with traders suggesting many fast money accounts were looking for a quick flip. Bloomberg Intelligence senior credit analyst Robert Schiffman is with us. I want to be honest, there's a lot of this story that I don't understand. So we've reported the approximate paper losses on what was a relatively recent bond sale, right? $25 billion from SpaceX. What do we need to understand about that figure or those figures, Robert?
Yeah, well, no pun intended, but this bond deal is not blowing up. Spreads are wider. We're about 15 to 25 wider out the curve, which shows that you can't make money every single day in the markets. It doesn't change the overall picture, though, of this investment grade, stable credit that has lots of borrowing capacity going forward as it builds its business. But I think everyone is pointing towards the daily moves of the sky is falling, looking for the day that AI valuations are going to completely turn. We've been to this dance before. It happens every couple of months. And I just think this is a little bit overstated. Bondholders are feeling a little bit of pain these days. I just don't think it's going to last.
Separating Bloomberg News reporting on what's happening with these bonds, Robert Schiffman leads our research of corporate credit. And that's really important. What you said there on IG rating, investment grade rating, is really important because SpaceX basically has a rating from the agencies that puts it on par with some of the biggest technology companies in the world. The difference is that those big tech companies have positive cash flows. SpaceX doesn't. Explain why that matters.
Well, it's interesting. These days, those companies, the Mount Rushmore of credits, the AA's and AAA's, Microsoft's, Amazon's, Meta's, and Alphabet's, are actually free cash flow negative. They're spending more money after CapEx and shareholder returns than they're pulling in. And that's why they're raising so much money. It's part of the reason why Alphabet raised $85 billion of equity just a few weeks ago. So they're all sort of in the same boat. You know, the difference, though, is that this is a triple B name, so it has less flexibility. It also is a new issuer. People don't really even know what SpaceX is. It's in a lot of different businesses, and they don't have a track record. What I would tell you, though, is that this name is rated higher than Oracle. It trades still tighter than Oracle. It doesn't look like a junk company, and it's not trading like a junk company, and I don't think it's going to. So I think these sort of near-term anomalies, like hedge funds are trying to make money. It was a down couple of days, both in the equity market and a little bit in the credit market. Credit spreads are out about 5 basis points. I just don't think it's as big of a deal as it seems like it is.
DI's Robert Schiffman, thank you very much.